Good evening, everyone. Welcome to USAA. We're thrilled to have you here for tonight's webinar. I'm joined by several of my colleagues, Cheryl Wilson, Mark Schultz, and Thomas Sovereign. And we're here to host a webinar on Social Security. I think you'll find it informative and interactive. We're going to try and spice it up and make it fun. You'll have a couple of poll questions. They might look like a quiz question. I think you'll find it entertaining. You're going to hear from each of our teammates and how they help members prepare for and live in retirement. Now, a few housekeeping items. Tonight's webinar is being recorded, and everyone who signed up for the webinar will receive a link to the replay in the coming days. You can ask questions anytime you want in the Q&A. You're the only one besides the panelists who will see the questions. None of your information will be shared with anyone. But I'd still advise you not to put personal information into the chat. We know a number of you have signed up for a follow-up call with some of our specialists like Mark, and we'll be conducting those outbound scheduled calls in the coming weeks. And we look forward to talking with you about your retirement plans. Now, we're going to do something tonight to kick off our webinar, which is special to USAA. As you know, all of us here as members of USAA are part of the larger military community. I'm a Navy veteran. I served 25 years in the United States Navy. I've been a USAA member for 35 years and an employee here at USAA for 10. And one of the things I'm most proud of is our mission, the way we center all of our activities on our mission and our core values. And as you'll see right here in our mission, we seek to be the #1 choice for the military community, their families. Now, we start meetings at USAA with what we call a mission moment. And it typically falls into one of two categories. Someone shares a personal story about their personal military service or that of their family or friends, or a way that they have helped a member or member family with a piece of advice or a service need that they had. So that's how we're going to start tonight. Then we'll go through some interactive poll questions. You'll see some of the tools that we use to help people make decisions on Social Security. Then we're going to have some Q&A at the end. We've got a lot of people on the line tonight. We're gathered together virtually with over 500 other USAA members. And so we'll bundle up those questions and take the most popular ones, and then we'll wrap up. So without further ado, I'm going to turn it over to Mark for his mission moment.
Thank you, Bill. Appreciate that. So recently, I had the honor of speaking with one of our tenured members here at USAA regarding his retirement plan. So the member was in his late 40s, working full-time as a civilian and serving part-time in the U.S. Army National Guard. So as we began our planning session, we started with the sources of income he anticipates relying on in retirement, primarily Social Security. So I then posed the question, what are your thoughts on Social Security? His response was of concern. So after a thorough discussion, I was able to provide the member a strategy of increasing his existing retirement savings and delaying his Social Security drawing date until the maximum age of 70. So this would allow him the option of either retiring at age 62 and supplementing his other sources of income with a distribution strategy from his retirement savings, or reducing his workload at 62 to part-time and allowing his assets to continue growing until he elects to stop working at age 70. So not to mention, both of these scenarios will also allow for a higher Social Security survivor's benefit for his spouse if he were to predecease her. So by empowering this member with the information necessary to see value in implementing a small change now, it will position him with an increased ability to combat what very well may be a reduction in his Social Security benefits due to a lack of sufficient program funding.
Thanks, Mark. And, one of the things that we often have is, we have those conversations and then we don't have an opportunity to hear how those strategies, once they were employed, how they worked out for the member. I actually had a member reach out to me a couple of months ago, and I'd had a very similar conversation with the one that you shared about 7-8 years ago as she was getting ready to retire. And as we went through the strategies and we looked at the resources that she and her husband had, we made the decision that it made a lot of sense for her to delay until age 70. And the reason why she was reaching out to me, she was about to turn 70 and she saved my name and my contact information for the last, 7-8 years, and wanted to make sure that she was doing the right thing, that now was the time for her to call the Social Security Administration and turn on those benefits. And the great thing was I had an opportunity to reflect back on the conversations that we had, to hear about her retirement, the travel that she and her husband had been able to do because of the distribution strategies that we had. And then inflation has been a big thing, right? That it's impacted so many of us over the last few years. And so to have that growth in Social Security benefit by delaying it to age 70 and also taking advantage of the recent cost of living increases, she was really looking forward to getting a pay raise, if you will, as she turned that benefit on at age 70. So it was really wonderful to hear the end of the story versus so many planning conversations like the one that you shared with us.
That's awesome. Well, thanks for those mission moments. All right, everyone. This is the beginning of our interactive portion of the webinar. I have a question for you. And if you watch the news closely, you may have seen some news about a recent Social Security Administration trustees report. So if you saw that, what year is the retirement and survivor benefit fully funded? Until what year is it fully funded? Let's open the poll, Thomas. All right, we're getting a lot of votes here. All right, let's see what we have. Well, that's great. Nearly 7 out of 10 people got that question right. So congratulations. This is a very well-informed group. But there's a little more to the story than that. And when you dig deeper into what's been reported about this potential shortfall, we have some things that we want to share.
All right, so what are those facts? So 2033 certainly out there in the headlines, but what does that really mean? Our benefits are funded through 2 different sources. One is the trust fund, and one is current payroll taxes. For those of us who are still working, we certainly are familiar with that because it's held from our paycheck each and every month. What is scheduled to be depleted based on our current facts is the trust fund. But as we look at the composition of our payments, the trust fund funds about 22%, and payroll taxes fund about 77%. So even if nothing else were to happen, if Congress were not to take any action, the benefits that you would receive would likely be somewhere in the neighborhood of that 77%, the amount that's funded through payroll tax. 2033 is 10 years away though, and there's lots of proposals that are out there. A couple of them are out there on our screen right now, potentially raising the age from 67 to 70 for your full retirement benefits, removing the cap on income. Right now, you're only taxed up to $160,200. So those are just a few things. We don't know what's going to happen, but a key takeaway and the most important thing for you to look at is Social Security may be reduced once the trust fund benefits are depleted, if they are depleted, but the majority of your benefits would continue to be paid through those payroll taxes.
Thank you, Cheryl. Yeah, so of course, while it's good to know the overall situation around Social Security, what's more important is how it could impact you personally, right? So as retirement income specialists, we get to know you and your needs, wants, and wishes in retirement to build a personalized income strategy. So within this tool, we can model the potential impact a reduction in Social Security benefits would have on your ability to fund those needs, wants, and wishes, and develop strategies to lessen the impact. For example, so annuities can provide guaranteed income to supplement any shortfalls from Social Security. So here in this example, we modeled the impact a 25% reduction in Social Security benefits would have. So as you can see, the member would be in good shape to cover their essential expenses, but without implementing any other strategies, they would likely need to pull back on their wants and wishes like travel or buying that new boat, right? So whether you're confident that Social Security will be fully funded or concerned that it might be reduced, we can use your input along with our expertise to build a personalized strategy for your individual situation. So, and now, more fun, time for our next poll question.
Now, this is a good one. We're going to do this poll question two ways, a little sneak preview. So the first one is, assuming that your monthly Social Security benefit would be $2,000 at a full retirement age, 67, how much would the benefit be if instead you took it early at age 62? Let's see how we do. I know we didn't tell you there was going to be math involved, so I apologize for that. It does make it fun. All right, the answers are coming in. That's good. All right. Wow, once again, a really, really good answer from our fans here at USAA. You showed up for this webinar well prepared. Most of you got that answer right, so nice job. Now, let's put it on the flip side. Of course, you can take it early, but you also can delay it up until age 70. So again, if your planned benefit would be $2,000 at age 67, what would the upside be if you waited until age 70? Thomas is going to put that poll up for us and we'll see what we get. Thanks for the, okay, here's the poll. I'll wait for the answers. I have a couple of other things I just want to share with you real quick. Wait for the poll to finish. And once again, the most popular answer is the right answer. So really nice job. Hey, I just want to let everybody know, I appreciate we're scrolling through the Q&A. And there's a lot of really good questions in here. So we're going to take some of those Q&A questions at the end. A number of them, though, are very specific to your personal situation. And I think that'd be a great reason to either schedule a call with us or call in, because we'll likely take those personal questions one-on-one. But back to the team to talk about the concept of a break-even point.
Sure, yeah. So common misconception, you'll get more income over your lifetime by claiming early. So it depends, right? So not to use that broad answer, but it really depends on many different factors in the member's specific situation. So first, we must know your anticipated monthly benefit. And from there, we're able to calculate your total lifetime benefit by simply adding all the monthly benefits together over your anticipated life expectancy. So the break-even point can then be determined, which would be the age you must attain to earn more lifetime benefit by deferring versus starting at age 62. So as shown on this page here, you can see by delaying Social Security until age 70, you're capitalizing on an additional $210,000 in total lifetime benefit over drawing at age 62, with only a break-even point of age 76. Key takeaway I'll emphasize here, many of our members, the break-even point is going to be earlier than they anticipated, right? Yeah, so as shown on the previous slide, it's important to have an understanding of your anticipated benefits, right? So you'll need what is called your full retirement age. This depends on your date of birth. Second, we'll need an accurate estimate of your benefit for claiming early, at full retirement age, and delayed at age 70, which can all be collected directly from the SSA website listed right here. So we'll also need the same information for your spouse if you're married, so take note of that. From there, the main variables we must consider would be you and your spouse's anticipated life expectancy, career earnings, whether or not there is an age difference between you and your spouse, et cetera, right? So this will allow us to optimize your claiming strategy based on your unique situation.
And Mark, you made a really good point about emphasizing if you're married, we need to look at both of your spouses. As we look at these statistics from the Social Security Administration, we've got 10 couples, everyone's age 65. And if we look at that, 6 of those couples will have at least one spouse who lives to age 90, and one of them who will live to age 100. That's far longer than 76, that break-even point that you mentioned in the example before. So key takeaway here is that it's not just about you. If you're married, when you're optimizing that strategy, we need to look at your spouse and take both of you into an account when we're figuring out when's the best time to claim Social Security.
Yeah, so of course, Social Security, it's just one piece to the puzzle, right? So to help you make the best decision, we need to understand your unique situation. So for example, do you have any other investments? Are they taxable, qualified? Do you have military income benefits, disability income? Do you have a spouse? And is there an age difference? Do you have rental income, pension income? Are you planning to work part-time in retirement? So all this information, it's critical in order to devise a strategy moving forward. So at USAA, we believe a sound strategy involves having your fixed living expense needs covered by guaranteed income sources. So as shown in the graph here, Social Security alone may not be enough. So the red area here, as you can see, it's indicating a shortfall. We don't like those. Yep. Second graph here. So depicted in this scenario, we've implemented a strategy using an annuity to provide additional guaranteed income. So that's the purple that you see here on the graph. So by implementing this strategy, almost all of the essential expenses in retirement, they're now covered. So Social Security can be delayed with confidence, resulting in a higher lifetime benefit. While this is just one scenario, we'll use the same tool to build a personalized retirement income strategy customized for your situation.
Thanks, Mark. Now,
Yep.
we at USAA, of course, have a lot of members who have unique situations because of working for the government, both in uniform and as civilians. So here's a true or false. We gave you an it depends as well. Here's a true or false question. Military and government employees don't receive full Social Security benefits. True, false, or it depends? All right, let's see how we're doing. Once again, the most popular answer is the correct answer. Nice job, everybody. Really good job. It does depend.
So depends isn't all that much of a satisfying answer. So we'll try and provide a little bit of clarity here. So when it comes to military benefits, if you join the military after 1957, which my guess is vast majority of people on this call would have done that, then you paid into Social Security all along and you're eligible to receive your full military pension, if eligible, right along with Social Security. Federal government workers, if you join the federal government before 1983, you might have paid into the old system and not paid into Social Security. However, starting in 1984, the federal government workers started to pay into Social Security, and any pension benefits that you would receive after that would still be eligible to receive Social Security benefits. So there may be a few people who have that blended system, but the vast majority of federal workers would also receive full Social Security benefits right alongside their federal government pension.
All right, yeah, so if you worked for a state or local employer in the past, especially as a teacher, you may have reduced benefits. So even today, some employers may not withhold Social Security taxes from your salary, right? So while a very small number of retirees are subject to WEP, so the windfall elimination provision, and a GPO, the government pension offset, it can disproportionately impact our USAA members, especially due to the fact teaching, it's a pretty common profession for military spouses, right? So shown here by the chart, this is viewable on page 2 of your Social Security statement, by the way. If there's any zeros, so if you pull this up, you see zeros, and you believe you were employed during that time frame, so that may be an indication that you will be affected. Okay. So these provisions, these can all get really technical depending on whether your earnings are considered substantial, where else you worked, whether you're receiving a pension, many other factors. So as specialists, we are trained to know the details, and we can help you understand if you're impacted, if so, how much. All right, and so shown here on the left, this is an example of the cover page of a retirement income strategy. It's a multi-page color document covering your needs, wants, wishes, high-level asset allocation, both current and suggested retirement income scenarios. So keep in mind to develop this RIS plan for about 30 to 45 minutes at time. Okay. After it is developed, it will be available in your documents folder on USAA.com. Now, on the right-hand side of the screen, we have some resources for you to utilize to, in your own time, collect additional information regarding Social Security through the SSA.gov website, and then also, of course, through the USA.com Advice Center. So if you haven't already, some homework, we strongly encourage you to register and view your personalized Social Security benefit information on SSA.gov. Very useful planning tools, calculators embedded in the site as well. What is most important, number one takeaway, please check the data to make sure it is accurate. So this applies not just to your Social Security benefits, but employer pension benefits, 401k and deferred contribution plan benefits, et cetera. So very important that, of course, not just for our planning purposes, but for your own purposes, that information you collect. Thanks, Bill.
Absolutely. Thanks, Mark. We have time for Q&A now. And as we've been going through the presentation, I've been scrolling through, did answer a couple of administrative questions in the chat. To Mark's point, it's really important that each of us plan and check out our information. So whether that's with your employer, with Medicare, with Social Security, all the places that you have, you have your money and you have healthcare benefits and pension benefits, those things are really important for you to keep track of and make sure that you have beneficiaries named, all those sorts of things. A number of you are asking about scheduling calls. We'll cover that as well, but certainly make sure that you take care to do those things. And I'll foot stomp Mark's point about the Social Security website. They've got great planning tools. It's USAA doesn't have a corner on the market for Social Security information. And I encourage you to, shop around, make sure that you go out to the Social Security website, look at their calculators. They're really, really good. And that'll prepare you to have a conversation with one of our specialists or whoever you do financial planning with. So I think you'll just be a well-prepared consumer, and it'll be a great experience for you. All right, Thomas, what are some of the popular questions that we've seen here in the Q&A?
Yep, absolutely. So sure, I'll direct the first question over to you. Earlier, you had shared a screenshot of one of our planning tools, and there was a probability of success. What does that mean, and how is it calculated?
Thanks for that question, Thomas. So all of the shots that you've seen are within our retirement income strategy, which is a service that we provide as a complimentary service to our members. And the probability of success, what that means is we gather all the information, everything that Mark talked about, your income, your assets, your different resources. We gather up all that information and we run a Monte Carlo analysis. And what that means is we're running 1,000 different scenarios, retiring you 1,000 different times. And we look at how many of those scenarios were successful. And what success means is that when you and your spouse, if married, pass away, you have some assets left to leave on to your heirs and loved ones. And so when we run those scenarios, we're looking at the number of them that's successful. So let's just say you had an 89% probability of success. That would mean in 890 of those scenarios, you had assets at the end of your planned lifetime.
Great, thank you for that. All right, Mark, I'm gonna come to you next. We have quite a few questions here regarding spousal benefits and spousal claiming. So I've got a two-part question for you. Hit a lot of these questions in general. So here's part one. So if one spouse is at the full retirement age and they're claiming their benefit and the other spouse is younger, say 63 or so, could they receive 50% of the older spouse's benefit?
It's a great question. Yeah, we actually do get this quite frequently. So the answer would be no. So the spouse would need to delay until their full retirement age in order to capture the full 50% spousal benefit from the working spouse. So otherwise, the benefit the spouse would receive, it would be reduced, commensurate based on how many years she draws early.
Got it. Okay, here's part two then. Same scenario, one spouse is at full retirement age, the other one is, the other spouse is younger. What happens if the older spouse delays claiming? What happens to the younger spouse's benefit?
Ooh, okay. Yeah. So in this scenario, so if the older spouse, the worker, if they delay claiming until age 70, it won't increase the younger spouse's spousal benefit above the max is 50% of the full retirement benefit from the older spouse, not from the age of 70 for the older spouse. So something I'll point out. So it will actually increase the survivor benefit for the younger spouse. So if the older spouse were to predecease the younger spouse by waiting and delaying until age 70, it will actually increase that survivor benefit. So that's still something to take note of.
Awesome. Thank you so much.
Yep.
Cheryl, come back to you, and don't worry, we have a two-part question for you as well. So we have a couple more questions on the tools we shared. So there was a Social Security calculator that shared out the break-even point and that total lifetime benefit. Could you share how that works, and can a member use that for their own scenario?
So thanks for that, and thanks for the two-parter. The answer is, as I mentioned before, every piece that we showed is embedded within the overall retirement income strategy. And so as Mark or one of his colleagues gathered that information from you, if you've not yet claimed Social Security, they would talk through and look at the benefits you would receive as part of the report, the analysis that you saw on the screen, and that would help you make the decision on when is the best time, the optimal time for you and your spouse to claim Social Security. So it's not something you do on your own, but rather something that's part of that complimentary service offered by our retirement income specialists.
Got it. So the second part to that one is more on the tool output. This should wrap us up for the tools, at least for now. So there was a chart that had we'll call it the purple bars in there that showed sources of income as well as an income shortfall. What does that chart mean, and how is that income shortfall calculated?
Great question. So Mark alluded to this a little bit. Here at USAA, we believe that to the extent possible, we want to see your essential expenses in retirement covered by income sources. Social Security is one of those, pensions could be one of those, maybe some part-time employment, but we want to make sure you've got a paycheck. You don't have to worry about writing the bills for your electricity, your mortgage, those kinds of things. So we look at that and we analyze that and we identify any gaps. That's our baseline. The second piece, and that's where we started to see the purple bars, is we want to get the red out. That's our job. We want to get the red out of those essential expenses. And so we can introduce different strategies, whether it be an annuity, whether it be retiring later, whether it be a little bit of part-time employment. So we'll work with you on your own personal strategy to get that red out and make sure you can go to bed at night and feel comfortable with all of those essential expenses being covered.
Awesome. Thank you. So Mark, I'll come to you for another one. It's in that chart, if you will, for the income sources. I have a question here. What are some of the pros, cons of tapping into the different qualifications of accounts and the sources of funds whenever you're looking for that source of income strategy? Is there a rule of thumb for which type of funds comes first, like your IRAs or Roths or your 401k? Could you please share more on that?
It's a great question. Yeah. And so, yeah, not to overuse the statement, but it really, it does depend on the member specific situation. And so, tax advice certainly would be in the realm for a CPA, licensed tax professional. However, as it relates to the member's retirement planning strategy, it really will depend primarily on what sources of guaranteed income will they be relying on in retirement, right? So optimally, we want to keep that tax burden down as much as we can while still allowing that member to maintain a comfortable standard of living in retirement. And so going back to guaranteed sources of income, that's where we would start.
Awesome. All right, Cheryl, or maybe Bill, you might want to take this one. So seeing a couple questions regarding assumption of the status of the trust fund. So we had that figure showed in the poll result earlier with when the trust fund may be expended in 2033 in about 10 years. If that's the case, the question is, should you start claiming earlier to have more of those years of full benefits, or delay your claiming strategy still?
Thanks, Thomas. Well, it's certainly a reasonable question. And when you read the trustee's report, it is unnerving. I'm a little nerdy, I have to confess. I started getting those Social Security reports a long time ago when I first got in the financial services industry. I've been reading them for a long time. They've always looked a little scary, quite frankly. When we think about the planning aspect, though, here's how I like to think about it. We saw in the tools, we had this probability of success, that was one. And then Mark had the other tool about what if the benefit is reduced. Here's how I think about it. Your retirement income needs can go up or down for lots of reasons. They can happen for lots of reasons. We don't always know when we're going to retire, for example. We don't always know inflation. We don't know what return we're going to earn on the investments we have in the stock market or in bonds. So I like to think of the question about the trust fund really as simply, there's a risk that I might need to generate more money in retirement for whatever reason. It could be because there's a Social Security problem. It could be because I retired earlier, or I got laid off, or something else happened. Stock market didn't do well for my investments. There's lots of reasons to have volatility for income. To Cheryl's point, we're looking for guarantees. We can't really predict what the politicians are going to do about Social Security, but we can discuss the risks of whether or not we'll have enough money, sort of regardless of circumstances. So that's really, I think, the bigger message here is that when you think about USAA, we're a protection company. Many of you have automobile insurance with us, or renters or homeowners insurance. You might have life insurance with us. You've got a mortgage or credit card, bank accounts with us. And USAA is really here to help the military community and their families think about how they spend their money, how they save, how they manage debt, how they protect things, and how they protect themselves and their financial means. So this is just another way of thinking about that. And we choose not to have an opinion as to whether they're going to solve a problem one way or the other. We simply choose to know that sometimes, the weather's good most of the time, but sometimes it rains. And in financial planning, this is what that is. Having a shortfall is the time that it rains, and we just want to make sure that we're protected against that. There was another question I saw a bunch of times about fees. So we don't charge to have these appointments. So just like this webinar, if you want to schedule a call to talk with one of our specialists, or if you just call in, there's no charge for that. We do sell annuities. That's not the only thing in the world that can solve these problems. We don't charge fees on the annuities. It's just embedded in the rate of return that comes on the annuities. So I think the best way to think about this is call and have a conversation and see what's right for you.
And Bill, do you need to be former military, or do you need to join USAA for that benefit?
Well, it's a two-part question, just like you said to some of these other folks. We always want to serve the military community. Technically, if any American can call and talk to us about life insurance or annuities. Those are legally open to anyone. We don't advertise it that way. It's not something we try to brag about. It's just the way we set up the rules of the life insurance company. But we are here to serve the military community. And so if you're a USAA member, you can log in, you can use that QR code, you can call us anytime and tell us your member number. We'll look you up and we'll have a great conversation.
Awesome. Cheryl, got another Social Security question for you. Are your Social Security benefits considered taxable income, or could you share about the taxation on Social Security benefits?
So great question. And Thomas, this is going to be another one that we're going to answer with everybody's favorite answer of tonight is it depends. So it depends on your other sources of income, how much of your Social Security benefits are taxed. Generally, only a portion of them are. But again, it's going to depend on your personal situation and your other sources of income. So yet another reason to have a conversation with us as we look at those projections moving forward.
Perfect. Thank you for that. All right, Mark, we'll go into your area as one of our retirement income specialists. So in general, as you're walking through the RIS tool with a member, how do you see our annuities come into play for those conversations?
Yeah, absolutely. And so I'll emphasize that the annuity is just a tool. It's a conduit. But what's most important is to understand the member's situation and develop a strategy. But how an annuity can be implemented into a strategy is, let's say as an example, there's a gap in income between when a member retires and when they're going to begin drawing Social Security. They're concerned about longevity risk. They're honestly concerned about the potential of outliving their money. An annuity can provide them a reliable, guaranteed source of income that they cannot outlive to not only fill that gap, but allow them to live a comfortable standard of living and not outlive those resources. Right? So that's generally how an annuity may fit.
Awesome. Thank you so much for that. All right, looking through for another question here from chat. Got a lot of different varieties. All right, so got a question here. Sure, maybe this one will be good for you. For a married couple, is there a limit on combined Social Security payments?
So the benefit is based on each individual's work history. If we do have one spouse who had limited time in the workplace, and there are other younger dependents, there are children that might be eligible to receive benefits. There are some family benefit limits, but when we're just talking about two spouses, their income is based on, their Social Security benefits are based on the income that they earned.
Got it. And I'll stay with you, Cheryl. What if you leave the workforce early, say at age 50, 55, retire early? How does that impact your future Social Security?
Yet another one that I'm going to say it depends on. So definitely leaving the workforce can have an impact on your benefits. To what extent it does is going to depend on how long you worked, right? So did you start working at a very young age? And also your level of income that you had throughout your working years.
All right. Awesome. Thank you. And then Mark, we'll go back to you. Got another couple annuity questions here. So first off, we'll start with how do you fund an annuity?
Sure. Yeah. So great question. So funding an annuity can be done in several ways. It's important to state, however, that an annuity is a product that can be owned inside of an account registration. One of many different types of products that are available to be purchased within what would be called a non-qualified account registration, traditional IRA, Roth IRA. Those would be the standard accounts. And so the annuity can be purchased with cash. That would be generally how you're funding a non-qualified, or think of it as a non-IRA registration. or it can be funded with a rollover from a prior employer. That would be into a traditional IRA typically. Not always, it depends. So key phrase there. And then transfer from another IRA into another IRA. So once those funds from the other IRA are into that traditional IRA or Roth IRA, at that point, the annuity can be purchased with that cash.
Perfect. Thank you for that.
Yep.
You know, we've had a couple of questions, Thomas, about annuities, and certainly we talked about them during the presentation. I want to just make sure it's clear to everyone. We're providing general education here about Social Security and risks, and certainly an annuity conversation can be part of that. We don't know any of your particular personal situations and whether or not an annuity would in any way be right for you. So it's important to understand that we're simply providing some education here about Social Security and the tools that we provide, the service we provide. We're not soliciting you to purchase an annuity tonight. We are certainly open to talking to you about your retirement planning, and that may be part of the conversation, but certainly not tonight. I recommend that you run out and buy an annuity from us or anybody else just based on this presentation. I would not do that. You need to have a conversation with a professional and make sure that you understand the risks that are involved in all of your retirement needs before you make any purchase decision.
Thank you for that, Bill.
Sure.
All right, I think we got about time for one last question, and then we can wrap up here. So just perfect for our membership here, specific to military benefits. Do VA disability payments affect Social Security benefits? And maybe that's something that you could answer, Cheryl.
Yes, and that's when I'm not going to say depends. It depends. So I finally get a clear answer. Your VA disability is completely separate from the Social Security retirement benefits that you do receive. With that being said, you may also be eligible for some Social Security disability, and that again would be separate and a separate analysis than your VA disability.
Perfect. A clear answer and not a it depends answer to close us. So
That's
Bill,
great.
I'll turn it over to you.
Well, thanks, Thomas. Ladies and gentlemen, it's been an absolute pleasure to spend this time with you in order to just to have the time together as members. You know, we're all members of this company. We own this company together. It's our company. USAA has been serving the military community for nearly 101 years. So we were founded in June of 1922. Last year, we celebrated 100 years. That's a lot of longevity. Cheryl and Mark went over some longevity stats earlier in the presentation, and you know that living to 100 for a person is rare. It's really rare for companies as well. We're focused on our next 100 years in serving the military community. Our job is to be there for you and your families, whether it's at our bank, with auto and home, life insurance, annuities, all the services that we offer. We do it for the military community, and we're proud of that. It makes us distinct and different, and that's what we like about working here. It's why we're thrilled that you signed up for this webinar. Whether you're watching it live with us tonight or on the replay, I'm very, very thankful that you spent the time with us. Lots of great questions, and it looks like this group is really well prepared for retirement. You've taken steps to make planful decisions, ask smart questions, and take accountability for it. So it's unsurprising that we've got a great group here tonight asking awesome questions. Thomas, Mark, Cheryl, thank you for what you do, serving members every day. I know, Mark, I think everyone's going to ask for you by name. I have to remind everybody, we have a whole team of people that are almost as good as Mark. Well, they're great. They're all just as good as Mark. They're fantastic, and they will really, really enjoy speaking to you, and I know you'll enjoy speaking to them. I'll just leave you with this. Let's keep in mind that we are here as part of this association and as part of this country because of the men and women that wear the uniform of our country. So I'm proud of you. I thank you for your membership and for your service and the service of your families. I wish you all the best, and we'll talk to you soon. Have a great night.